Hey everybody, this is Uzi from the Option Selling Institute. That's where we sell options on stocks, futures, indexes, and on companies that are reporting their earnings. Whether we sell options on earnings pre or post announcement, we trade earnings aggressively. It's the Discord where we have a 95+% win rate and where our members were profitable in 2024. Now, in this video, I'd like to talk about how the average person or average Joe or Jane can get involved in something similar to what we do, but on a much less time-intensive basis. I do it full time. Many of my members are full time. Many of them actually have full-time jobs. But what I'm going to show you here today is something you can do once a month, so 12 times a year. And once you get the process down, it shouldn't take you more than 5 or 10 minutes to do the planning. And then you can execute your orders, let's say on a Monday when the market opens. But that you can also figure out along the way. Now, I'm going to show you some results that actually can be better than what I show you, depending on how the market is, and sometimes might be worse. But the average Joe can do this, and if it works well, should be able to make 16% or more per year on an account, let's say from $10,000 or more. The more you have, the better. But I'm going to show you based on, let's say, a $10,000 account on what's possible. Okay. All right. Let's talk about it for a moment because a lot of people are afraid of options. A lot of people think that options are more risky than stocks, and that's simply not true. It's too big of a conversation to have at this moment, but options can actually be safer than investing in stocks themselves. Even though with this process I'm about to go through with you, you may find yourself owning shares of stock. Don't be afraid of that because what that'll allow you to do is sometimes collect a dividend if it's a dividend paying stock. So now you actually amplify your returns, but also you'll be able to sell what's called covered calls and bring in additional premium, equally amplifying your returns for the year. So while an average year should be able, you should be able to do between 12 and 16% or more, if you get assigned on some of the shares, which means you were given those shares because you sold a contract, which is a put contract, put option, that you're now assigned those shares. Now that becomes like it's an entity that you own, similar to owning, let's call it a house or something that you can rent out weekly or monthly by selling covered calls against that position, bringing in more premium. So I'm getting a little bit ahead of myself, but let's get into some of the details and let me show you how you can do this. Okay, so first thing you're gonna do is you're gonna go to finviz.com. And you can see it up here. I'm gonna highlight it for you. You can see it up here in the upper left, and that's finviz.com right here. Okay, and you're gonna go there, and then you're going to go to the main site. Okay. Once you get to the main site, it's going to let me actually just show you because I want to show you what I actually did. So you go to finviz.com, and here it is. This is Finviz, what it looks like. Then you go to this area here called Screener. Okay. You click the Screener, and then you get a whole host of choices of what you can do. We went and we changed the price because we don't want just any stock, any price. And I'll show you what we changed it to. Then you want to go to relative volume. You want to make sure you're getting a decent amount of volume. Okay. Then you want to go to the technical. So right here, you're going to go to the technical button. Okay. So first we went to the descriptive and we did the price, the relative volume, and then you're going to go to technical. Okay. And then you're going to, let me show you. You're going to go to two spots. You're going to go to this one here. So above, we're going to go to the 50-day moving average, and we're going to go to, well, yeah, that's it. But we can add at another time the RSI. Actually, no, we're going to do that now. We're going to do that now. That's important, actually. Okay, so we're going to go to 50-day moving average and RSI. Pardon me for not being as prepared as I'd like to be, but it is a little bit late on a Saturday. I wanted to get this in before the weekend. All right, so what we're going to do now is go back to where I was over here, and you can see that we have, let's go to the descriptive. The descriptive is we went to price, and we made it anywhere between $50 and $100, and I'll show you why. And then we went, hang on, what's going on here? Okay, then we went to the average volume, and it's over, we want to change that to over 2 million. So we have two spots, volume and price, okay? Once we did that, we then went to descriptive, I'm sorry, technical, and we changed the simple moving average. We want to have the price above the 50 simple moving average, and we want to have the RSI not oversold, greater than 40, okay? And those are some variables, four simple variables. It's all you have to click on in this website. And the name of the website, again, is finviz.com, okay? But it's free source. You don't have to pay anything for that, okay? And what you're going to get now is a population of symbols. Now, these are all symbols that fit the criterion, okay? And they're listed 1 to 20 on this page, and it goes all the way up to 60, 51, actually, okay? Now, in no apparent order, I just wanted to discuss how you would go about choosing some of these. I recommend you go with names that you're familiar with. So, for example, Delta Airlines, right? Maybe you fly, so Delta Airlines. Maybe you shop at the dollar store. Maybe you shop at Estee Lauder. Maybe you watch TV on a Roku TV. Maybe you have Skechers sneakers. Maybe you eat at Chipotle. Okay, so these are the names that actually populated on this list, and I'm going to show you right here. So the first one we're going to talk about quickly is Delta. Okay, so Delta gets populated because it fits the criterion up above. So the first thing we're going to do now is, and by the way, I would recommend opening up an account at Charles Schwab for a couple of reasons. One of which is that you get to use their trading platform. It's also free. It's a free platform that you get when you sign up with Thinkorswim. I'm sorry, with Schwab, and they have a platform. Let me just change something quickly here. Okay, and let's change this to, give me 1 second. I have to change something. Okay, we want to make this, okay, give me 1 second. Okay, that's good. So what we do is we get access to this platform. Okay, this is my live account, all my accounts, but I blocked out the account numbers. You can't see that. So this is a live account. Now, what I want to show you is Delta Airlines. So you're going to get this platform, which is the one of the best out there. So you would type in Delta, which is the symbol is DAL, and then you're going to go to the trade tab. When you go to the trade tab, you're going to look for 30 days out. So again, we're going to do this once a month. So we're going to look for positions to do them at about 30 days out. Now, I'm going to just back out of some of these and show you. This is the days till expiration right here. So if you're looking for something 30 days out, what you do is you look at these numbers right here. Okay, this is 13 days out, 20, 27, and 34. So 34 days is over a month. So let's take a look at the 27 days till expiration and see what we come up with. Okay. We go to the 27, we click that, and then we go to the put side. So these are calls on the left over here, okay? And then we have the puts over here on the right. Puts right here, okay? So what we do then is we look at the delta. Now the delta right here is the column right here, which I have, okay? And what we're going to do now is we're going to look for a 30 delta. Why 30? Well, 30 delta means this. You can equate delta meaning the probability of this particular option expiring in the money, or we can converse it and say worthless, meaning you would get to keep all the profits. So if we're going to look for a 30 delta, that means it has a 30% chance of being in the money, or a 70% win rate chance for you, 70% win rate chance for you if you sell this put. Now, this put in question is a $64 put, okay? And you can see the prices. It's bid at 133, okay? Asked at 157. Now, what that means is you're going to get filled somewhere right in the middle, and I'm going to show you how you find that. Very simple. All you do is you click on this number here. Oh, hang on, I got to click. You're going to click on the 64 on the bid side. That's going to populate. Now you see the NAT, which means the natural price, which means if you just want to get in, you can sell it right now at that price. But more times than not, you can get filled at what's called the mid price. So you click the mid price, and that means you're going to get $1.41 or $145 to sell that put. Now, the share price on Delta currently is $66.95. So if you're bringing in $145, And to sell this put, allocate the broker is going to allocate $6,695 of your funds out of that $10,000 account. It's going to set aside $6,695 on the side. You can't touch that money now until you close this position. And what that means is you're going to be bringing in $145 using $6,695. And if you do the math, that comes out to 2.1%. Now, 2.1% is at max profit if you let this expire in the 27 days. But let's just say you don't want to wait that long for various reasons. Maybe the stock begins to go down. Maybe maybe the market begins to go down or change. You can close this by buying it back. And even if you close this by buying it back at 50% of what you sold it for, you're going to be bringing in 1.05. So 1.05%, and that's in 27 days. Now, if you did the math, 1.05 times 12, okay, that equals 12.6% a year. And that's if you do it and close it at 50%, okay? And this is without running into any difficulty. Now, even if you run into difficulty, sometimes your returns can go even higher. And I'll explain that coming up. But so here's an example with Delta where you use a $6,695 investment. They allocate that on the side. You can't touch that money until you close this position. You're going to bring in $145 in 27 days. And even if you close it at half of that profit, you're going to still make 1.05% for that particular month. Okay. Now let's go back to that. Let's go back to the screen we had before. Okay. So Delta was one of them right here. And then another one is right below it is Dollar Tree. So let's pull up Dollar Tree now on the Thinkorswim platform. Okay. We go to DLTR. We erase some of these highlighters from before. So DLTR, same thing. You click on the trade tab and you go to that same 27 days out. You can see I'm already in a position on this particular stock. You go to the 30 Delta. Now, you can go to the 30 Delta. I'm in from a few weeks ago, so the Delta has changed. So let's go to the 30 Delta. So we're going to click on the 30 Delta like this right there, highlight it for you. It's a $69 strike, meaning you're going to be on the hook for $6,900. Actually, I goofed in the previous example. I'm sorry. You're not on the hook for the price of the stock at this moment. You're actually only on the hook. Pardon me for being erroneous there. You're only on the hook for being filled at the price you sell the put for. So you're going to sell a $69 strike price. You're only on the hook for $6,900. So let's do the math now. So on this particular example, you're going to sell it at, you're going to click it at 172, but you're going to try to get filled at the mid. So let's say you get filled at the mid. That's $189 because you take 1.89 times 100 because this represents 100 shares of stock. So you have to multiply 1.89 times 100. You just take the decimal point, move it over 2 spots. That's $189. Divide that by the price that you're going to be selling at, which is $69. But again, that represents 100 shares. So you have to multiply that by 100. So you get $6,900. So now you're making 2.7%, okay, in 27 days. So again, 189, okay, divide that by $6,900 is 2.7%. And if you close, now that's if you let it expire at full profit. That's 2.97% in a month, 27 days. If you close that at 50%, so we're assuming you're going to close this early and you're going to close this for half of that, you're going to still bring in 1.36% for the month. If you're able to do that every month for 12 months, that is a return of 16.4% before I even talk about what else you could do with your funds. Now, I have more examples. Let's go over one more that you might resonate with because it's also on the list, and I'll show it to you. It's Estee Lauder. Let's say you or someone in your life, male or female, happens to use Estee Lauder products. Now, let me just scroll one more. Let's click on this highlight number 2, and let's find the Estee Lauder. And here it is. So Estee Lauder is part of this scan as well, right there. EL is the symbol, Estee Lauder Company. And what we're going to do now is we're going to look at it in the Thinkorswim platform. which again is the one of the best out there, especially for doing this type of work. And again, it's free. So you now type in this area here for the symbol EL, Estee Lauder. And again, we're going to look at the 27 days out, and we're going to go to a 30 delta. So we can just click on the right side over here, away from any of these numbers. We click here and it highlights it for us. So it's the $68 strike. It's a 30 delta. That means 30 delta means it's got a 70% chance of expiring out of the money, meaning you would keep all of the money you're going to get for selling this particular put. Now, again, to find out how much you would get, you want to click on, let's say, the 50, and then you're going to look at the mid price. This is the middle between the bid and the ask, and you should be able to get filled there. So that's 2.72. So that's 2.72 times 100, again, because it's 100 shares, and you divide that by the strike price, which means the price you would have to buy it at, which is $68. And that would be $6,800 of funds that you would have to have put aside at the broker. And that would be a 4% return if it expires worthless in a month. Okay. But we're going to close that maybe at 50%, take our profits off the table if we can early and close at 50%. Sometimes you can close at higher than 50%, but I'm assuming at 50%. So if you did that, you would make 2% in 27 days on your money. Now, if you could do that every month, that's 24% a year, plus the extra that I'm going to show you in a moment. So this is how the average person, with just a little bit of weekend reading or experience by looking either at some other YouTube videos or by reaching out to me, I can help you out with that to understand some of the different things that are most important about options, which are calls and puts. Everything is based off of calls and puts. I have a Discord in case you'd like to come and get educated there. You can do that as well. But if that's too time consuming or you don't have the time, you can always reach out to me on the comments. I do coaching. I can set you up easily, with Zoom meetings, or you can follow somebody else on Twitter or YouTube that has some videos out there on some basic knowledge of options that you can get started on. Now, what I want to show you now is the additional that you can bring in every year. So if you go to schwab.com, anyone can go to schwab.com. I didn't even log in. All you have to do is go to schwab.com and then click on the section that says money market funds. And that'll bring you to this area here. And it says compare these particular fund types. Now, they offer two, but the one I'm going to talk about is this Schwab Value Advantage Fund. When you put your money into this fund, the symbol is right here, you're going to earn 4.19% per year. And when you do that, after 30 days after you put your money into this account, this money becomes 90+% fully usable for doing any type of trading that you'd like. So all these trades I've been talking about, you can utilize the 10, let's say it's a hypothetical $10,000 account. You take your $10,000, you open an account with Schwab, you put it in this fund, you start earning 4.19% a year. Okay. Then on top of that, you do the trades that I've just been discussing with you, closing them early at 50% of what we sold the premium, the put contracts premium for. And if you add those two up, I'm going to show you what it comes out to be in a moment. But it gets better than that if, in fact, you do get into a little bit of a sticky situation. So let's go back to the slide and let's go to the next one. So let's just say you get assigned. Now, what that means is the stock fell below your price that you were willing to be assigned at. So if you sold a $68 put and the price fell to 65, you're going to get assigned. Now there's another choice that you can actually choose to go with, and that's to roll that put, and that'll be the subject of another video. But for now, let's just say worst case scenario, you get assigned. So now you bought the stock. You bought the stock at 68, and the stock price is at 65. The first thing you're going to do is you're going to immediately start selling what's called covered calls. That'll be the topic of another video, but it's not hard to understand. So instead of selling a put, let's say at 68 like you did, you're now going to sell a call at 68, which means it's covered because you already own those shares. Now, when you sell that covered call at 68, let me get a different color here because that's not showing up. When you sell a covered call at 68, okay, you're going to be selling it at the price that you were assigned, and you're going to sell it 1 to 2 weeks out. This will bring in additional premium and which will lower your cost basis. So again, hypothetically, you brought in, let's just say on this particular trade, you brought in, let's say $150 on the put sell. Now, because you got assigned, you didn't get to close this early. You're going to keep all $150. And then when you sell that covered call, let's say you bring in another 50. So if you had 150 and 50, that's 2 points. That would lower your cost basis by 2 points off the share price, which you paid 68. So your cost basis is now 66. So the moment the stock begins to move above 66, you're at profit. You're break even at 66, but the minute you start to go past 66, you're now in profit. So if the stock price shoots up to 68, back to where you were assigned, you just made $200, and let's say that was within 10 or 20 days past that, you're now amplifying your returns. Okay. And I got ahead of myself, but if you get taken out at your assigned price, you will have made profits from selling the original put and selling the additional premium of the covered call. And this will totally amplify your end of the year profits to well over 16%. All right. Let me just get my point there. Now, the money market fund is 4.19% a year. And we're assuming, let's just say on a month, you make only 1.5% after closing it at 50%. So 1.5% times 12 months is 12.6%. If you add 12.6% and the money market fund, you're at 16.79% a year. Now, if you add in the benefit of selling covered calls on a few of your assignments, you could be well over 20% a year. Now, this return at 16.7% is a little less, just a little less than what the market has returned the last 2 years, which has been 20% back to back. But the market doesn't historically return 20% every year. It historically returns around 10%. This is a strategy that you can do on your own. Again, doing it 12 times a year or more, depending on if you get assigned, you may have to do a little bit more work, but it doesn't become too much of extra work when you know you're going to be making extra money, provided the stock doesn't just keep going down. And that'll be the topic of another discussion, because that can happen. But for the most part, if you're following some of the if you follow the details and the inputs at Finviz, we're following stocks that are above their moving average, their 50-period moving average. So they're strong stocks, and they haven't been oversold, which is why we did the RSI scan. So we've got stocks that trade a lot, and they also trade a lot of volume. So these are not just fly-by-night companies. They're not $2 stocks. They're between $50 and $100 stocks. So they're legitimate companies. And again, these are companies that I recommend that you would like to own. So they're CMG, Chipotle Mexican Grill, they're Dollar Tree, they're Estee Lauder, they're Delta Airlines, the whole host of other names, Skechers, that also showed up in this scan, Roku. So these are companies that you use these products, or you know people who do. So it's not like you're buying a company you've never heard of or a penny stock. These are companies that should rally back to where you got in time if it doesn't happen right away, and you're okay owning these stocks, and some of them will pay a dividend. So on top of all that, you might be able to collect a dividend. So now let me just talk about what I do in my Discord. Now we are a group of I wouldn't call us professional, because we don't work for any investment firms, but we've been doing this a long time. A lot of us. I'm doing it. This is going to go on my 26th year. And again, we sell premium. That's discussing what I just discussed here. We're selling puts. We sell puts and calls, though, on stocks, futures, indexes, and earnings. Okay, we do all types of option strategies, from the simple calls and puts to the complicated. And like I said, we do earnings pre and post announcement, depending on how the setup is. And we also do speculative trades every now and then with very low risk to high reward ratios, and we don't use a lot of our money. We use some of the profits that we've made along the way. My group had a profitable 2024 year, and I'm happy to say we're 5-star rated by all of the members that decided to leave a review. So you're getting experience here, and then the membership will stand behind all my claims. We're doing great, and everyone's making money. And we go through some difficult times at times, because the market is not easy. If it was easy, your neighbors would be doing it. You'd already be doing it. But this is something that you can get into on a part-time basis. Do something once every month. And again, if you get assigned, you'll have to do a little bit of extra work. If you do get assigned and the stock keeps going down against you, you're going to be a little concerned. But again, you're buying companies that are well-known. You use their products. And you also have the option of rolling that put out if you don't want assignment. That'll be a topic for another video. But if this is something that sounds interesting to you, if it was helpful, I'd like to let you know how you can get a hold of me. You can follow the link in the description box, where you can get to my website at wap.com. You'll see a few choices on how you can get involved with us. And by all means, I'd love to have you for 2025, help you to make some money, even if it's just on a part-time basis. Or if you have the time and you'd like to spend some time in my Discord, there's always a spot available for you. We do have a cap on the number of members that will be joining this year. So it's early in the year. Jump on this if you'd like. I'm happy to help you become profitable or just add extra income as a side hustle to your trading account or to your investment account. All right, with that, this is Uzi again from the Option Selling Institute. I want to thank you for watching this video. If you have any questions, reach out to me in the comment section. If you don't mind, give me a like and a subscribe. It helps me build the channel so I can keep putting these videos out for you guys and girls, and hopefully help you guys to make some money. Okay, that's it. This is Uzi. Thanks for watching. See you on the next one.